I want to see if you can now on the LinkedIn.
Okay. Hold on 1 second. Let's see. Not yet. It's still saying starting soon.
Okay, so let me view this on LinkedIn. Okay, testing, testing. Can you come back out and go back in?
Mm-hmm.
Okay,
For LinkedIn.
yes.
Okay. I see you.
Okay, perfect. All right. Thanks so much.
You're welcome.
All right.
All right. Bye-bye.
Bye-bye. All right. Well, good afternoon, everyone. Let me turn my video on. Okay. Good afternoon, everyone. Welcome. I'm going to be respectful of your time. We're going to start on time and we're going to end on time. So welcome, everyone. If you can turn your cameras on, I'd love for you to do that as well. That's where I get my energy from, Georgia. I appreciate your camera being on. I see you're multitasking. I see a few of our members. Renita, you finally made it. Renita Young, the wonderful correspondent on Schwab's Network. Girl, you guys keep switching it up on me. I have to, but it's all good. I see you're outside getting your walk on. Natalie, so good to see you, girl. You running a business and still taking some time out. So welcome everyone. We're also streaming on LinkedIn. I am writing solo today, so I'm going to be multitasking too. But I'm excited that you're all here. Hey, in the chat, uh, let me know. Yes, I know some of you are listening at work, so that's cool too. I understand if you can't go on, come on. Edith, welcome, welcome, welcome. Good to see you. Okay, Glenda, you did? Okay. But you got your headphones on. That's pretty cool. Awesome. I see new faces. I see existing members, and that's always good. So just briefly, a little bit about myself. I'm Deborah Owens. I'm founder and CEO of WealthyU, and we're really on a mission to teach first generation investors how to invest, right? How to turn their income into wealth. So I'm going to be sharing some insights with you, some amazing stories of the transformations that many of the women in WealthyU um, have experienced just because they got access to the right information. In the chat, though, if you could just introduce yourself by telling me where you hail from so I can give you some shout outs. I always love to see what cities people are joining me from, and I'll give you a shout out as well. So welcome to our presentation, Wealth Secrets for First Generation High Earners. And what I want to share with you is that I am you. I am that person who was the first in my family, right? To do so many things, to go into the corporate world, achieve a management role in a very significant company. And what I realized is how much I didn't know, right? And if you feel that way, like you got your college degree, you got your education, and yet you get into these different rooms and you have no idea what they're talking about, because in many cases they're talking a different language. If you can relate to that, put me in the chat. Okay, Renita from Chicago. Let's see. Edith from Washington, D.C., Maryland. Yeah, I'm in the DMV too. If you can relate to that, then excellent. Great. One of my team members just joined me, and I'm gonna make her co-host so she can help me let people in. Hello, Cameo, one of my colleagues from a mastermind that I'm in as well. Well, good to see you. So you guys ready to get into it? Okay, let's do just that. So first of all, I want to make sure all of you can see the PowerPoint. Can all of you see the PowerPoint? And all of you hear me in the chat, let me know. It's nothing like doing a presentation and people, I can't hear you, I can't hear you. Let me welcome Jacelyn Blankenship. She's one of our team members, one of our ambassadors. So she'll be perusing the chat and letting people in. And if you're on LinkedIn, welcome, welcome, welcome. So Who am I? Well, I'll get into that a little bit more, but I've spent most of my career in the investment industry. I've written several books. I'll tell you a little bit about that later, and just really positioned myself as someone who wanted to give people who didn't come from wealth insight. Right. And so what I want to share with you today is really those insights. And as you can imagine, with more than 2 decades of experience in the investment industry, financial expert, now they're calling them content creators, brand ambassadors. So I've worked with a lot of different companies and did some national tours, all with the goal focused on wealth. And so what I want to say is there's a difference between personal finance and wealth. For so many of us, we are taught, I know that's what my parents did for me is, get a good job, manage your money, get a big house, right? And you'll be successful. But I've already asked you guys to introduce yourselves, so I'm going to skip that. But I'm interested in the chat. What did you hope to learn from attending this event? You took time out of your busy day to attend it. And so, I've got a formal presentation. I'm going to leave some time for Q&A at the end, but I am interested in knowing what piqued your interest. Wealth secrets of first generation high earners. So if you stay until the end, you're gonna get a gift, right? So I like that. This isn't just some little what do I want to say handout. It really is a great gift, and it's going to share much more of the insights that I'm going to share with you. Since I only have this short period of time, that's what your gift is going to give you. But first, I want to start the question off with this. I want to start the present. What is your highest monthly expense? In the chat. What is your highest monthly expense? Okay, I'll get back to that. So first, I want to talk about who this webinar is for. So this webinar are for you high overachievers. You high educational attainment, checked out all the boxes, college degree, management track, could be sorority, alumni association, industry rock star, but you're also a conservative investor. And you may not even consider yourself that, but you're in a high tax bracket. If that describes you, put me in the chat. Okay, you could even be a corporate trailblazer like I was. First generation, postgraduate, BA, MBA, made it to senior manager, director. In some cases, to get there, you took on a lot of debt to get those degrees. But your retirement savings is low relative to your earnings. And because of that, you have a negative net worth and you're in a high tax bracket. And, just so you know, these really are kind of archetypes of the women who have been in WealthyU. Okay. You could be a late bloomer. Now, here's the thing. I consider myself a late bloomer, even though I had, a pretty significant career. I left the corporate fast track and started consulting so I could spend more time with my kids. And so as a result, I wasn't putting the amount of investment in my retirement savings because I wasn't making as much income. And then, for me, I didn't re-enter the workforce, but, my consulting business grew. And for many of you, that can leave you at a disadvantage where you have inadequate retirement savings. If that's you, put me in the chat. And then finally, maybe you're an entrepreneur. If you're an entrepreneur, you left the corporate career with the cushy benefits to start your own business. You're consulting as a solopreneur, trying to create financial security as a business owner. And let me tell you, whoo, Entrepreneurship is not for the faint of heart, and I am here to tell you. Maybe you have an old employer plan sitting at a prior employer and you have no clue what to do next. But what I would say is that how many of you feel like I didn't hit all the points, but you could relate to many of these. If you could, like, if you were not everyone was you, but you could relate to some of them, put me in the chat. So the reason I do this is because I want you to know you're in the right place. And what I will also want you to know is you were given the wrong blueprint, right? And so, it's interesting. I was on a coaching call this morning, and she said, I just feel like I'm running out of time and I need to get a handle on this, right? And I think for so many of us, particularly as women, we take care, we've been on this journey. And for what I find with so many women is that we've learned how to save and we've learned how to earn, but we haven't learned how to turn that income into wealth. And so how do I know that? Well, because that is me, right? Like on the left is my mother, and that is her graduation picture. And my mother was the daughter of a sharecropper, and she had dreams of um, moving from the deep South and marrying a man and finding her fortune. And as chance would have it, she would meet my father. They would migrate to Detroit, Michigan, and they would have 5 kids, and I was their youngest, and they would create a great middle class existence, right? So that's when you didn't even have to have a college degree. You could work in the factories and you could make a living, but she didn't want that for me. So the blueprint she gave me, and especially being the youngest, when their incomes had risen to a level where they could invest. So there was private Catholic high school, there was college, and her dream for me was I would be the professional and achieve that dream of 6 figures. And the idyllic family and achieve financial success. So that was her blueprint: college, career, marriage, house, and that would lead to wealth. And we're often told that our house is how we gain wealth. How many of you were given that blueprint? If that was a blueprint you were given, put me in the chat. But what I didn't realize was that even though I continued to focus on earning more, what I didn't realize is that I didn't really know how to turn that income into wealth. So what my mother in that blueprint gave me was the earner mindset. And they said, if you earn more, eventually you would be financially successful. Well, by chance, I ended up in the investment industry. And what I learned was the wealthy had a different mindset. I used to call it a wealth mindset, but now I call it an owner mindset. And the reason that I do that is that really is the secret foundationally to achieving wealth and ultimately generational wealth. Is shifting from that earner mindset and learning how to turn that income into wealth. So how did I learn that? I learned that by spending more than a decade with a company that allowed me to see inside of the wealthy and the high net worth. And what I immediately noticed was they had a different blueprint. And that blueprint was that they had intergenerational wealth. They weren't just starting to build portfolios, that those assets had been passed down from generation to generation. And also what I learned was that the knowledge of how to build wealth is inherited. Now, I want you guys to get this because this is critical for you to understand. For so many of us, we feel like we're at a disadvantage. We're watching CNBC and we don't have the slightest bit of what they're talking about, earnings surprises, peg ratio, all these different things, right? Because that's the language of investing. But I got a question for all of you. How many of you have a BA, an MBA, maybe even a JD, and throughout your formal education, you never took a course that taught you how to invest or build wealth? If that's you, put me in the chat. That you went through your formal education and there was not any course that taught you about the financial markets, how to build an investment portfolio. Well, that's what, once I, got my broker's license and my securities license, that's what I realized. How come I didn't learn any of this in my formal education? Well, a couple of things. I'm not going to say it's by design, but I am going to say that a major thing shifted in the way that the middle class secured their financial futures. They went from working for a job and having a pension to having to now have a 401k, a 403b, a 457, and invest on their own. And so I learned so much from being with high net worth clients, being exposed to our portfolio managers. And then I wanted to share that secret with the world. Because what I also realized is that it's also not how much you earn. It's really not. It's how much you keep. And so that's the other secret of the wealthy is they know that how to use the tax laws to their benefit. And it's not that we can't do the same thing. It's just that that's another thing we're not taught. And so why is this important? It's important because these are the secrets that allow that 1%, right, to get wealthier and leave us at a disadvantage. And so once I learned these secrets, I was on a journey. I tried to do so many things. First, I thought I could put it in a radio show, and so that I could talk about this information. I had a show on NPR affiliate in Baltimore for many years. I wrote my first book, Confident Investing. I went on tour with Bishop Jakes and was touring in stadiums with 40 and 50,000 women in it. I wrote my next book, A Purse of Your Own. We produced a public television special for public TV. And I thought I could start purse groups and women could get together and learn this information and apply it. But what I also learned, and this is me being interviewed on CNN about this program that I had, The Power of a Purse and a Purse of Your Own. But it wasn't until we launched WealthyU and I actually figured out a system or a blueprint to share these secrets that everything changed. I mean, literally everything changed. And from there, I was able to come up with a system or the blueprint for first generation investors. And once it was trial and error. I want to tell you guys, it took years, right, to perfect it. But now what is just so, so rewarding is seeing so many women, once they get this insight and this knowledge, apply it and accelerate their financial growth. I mean, that's really the goal, is to give the same access to the knowledge and insight that 1% has that we're never exposed to. And so here's an example of what happens when you're exposed to this information. So this is Belinda. She was 20 years into her career and knew that she wasn't on track with her retirement savings. Her personal rate of return was less than 5% and barely growing. She had delegated her investments to an advisor, not really understanding what he was doing. And he ended up transferring that into an annuity with very high surrender fees. She had a sense that something was wrong, but she wasn't sure what. So when she started in WealthyU, she learned how to analyze, optimize, and maximize the investments that are in her retirement plan. Because for most of you, where is the bulk of your investments? Is it in your 401k or your employer-sponsored retirement plan? If it is, put me in the chat. But she achieved seven figures in her retirement plan. She established a brokerage account and opened and built an investment portfolio, established a backdoor IRA, which many people aren't familiar with, and also uh, uh, learned how to do tax advantage strategy. So this was a text that I got one morning from her, and it said, Deborah, I learned last night that I've become one of those with a seven-figure retirement account. I can't thank you enough. If only I had taken a class from you sooner. Who knows what that account could be, but it is as it should be. But what I want to say is that all Belinda really needed was access to the right information. And with the right information, ladies, there is no question of what you can accomplish. Excuse me, I'm just going to sit down for just a minute. Okay, so what did Belinda learn? Well, Belinda got the right blueprint, but what she also had to realize that she was a first generation investor. And she, even though she was very accomplished in software development, in tech, she had never gotten access to the information. And so this is Tennille. Tennille was one of my youngest coaching clients, and she had no prior investment knowledge. She had low returns on her investments, but she didn't understand why they weren't growing. And after she joined WealthyU, she learned how to analyze, optimize, and maximize her retirement plan. She began to expand and take full advantage of her benefits. She invested in an employee stock purchase plan. If you work for a public company, I would love to know if you have an opportunity to invest through your employee stock purchase program, because a lot of people aren't taking advantage of their opportunities. And so I'm going to share with you a little bit later those strategies that you need to be taking advantage of through your employer benefits. So this is Tennille. And I didn't know this. She just posted this recently. She said, well, I've always been a saver, invested in my retirement fund since the age of 21. I wasn't clear at all on how to perform a fundamental analysis of a company. You started working with me in 2015. Is that crazy? I told you guys this has been a long time in terms of perfecting the system. But to make a long story short, she reached the seven-figure mark and is now on her way to multi-seven figures before her 50th birthday. And all she was, I'm not taking credit for that. What I want you to know is that this young woman simply got access to the information that the wealthy have always had. And as a result, she was able to accelerate her financial growth. And so for many of you, what you may not know is that your investments are sitting there. And if they're not growing at a higher rate of return, then you're not turning your income into wealth. And not only that, for so many, particularly women, we are playing not to lose. And so what do I mean by that? Playing not to lose is that we're so afraid to take risk, right? That as a result, we don't realize taking no risk is the greatest risk of all, so that our money doesn't grow over time. And in my book, Wealth Secrets, which by the way, if you stay to the end, you're all going to get a copy of the ebook. I share all of the secrets that the wealthy know and exactly what you need to do to make the shift from that earner to that owner mindset. Now, why is that important? So what do I mean by earner to owner? Let's get right to it. I love this chart, okay? By the way, I love numbers, just so you guys know. But basically, what this shows is the percent of total assets and liabilities held by the wealthiest 1%, the next 9%, and the bottom 90%. So when I talk about making a shift from an earner to an owner mindset, what I'm saying is this is what the wealthy know. So look at the difference between the 63% and the bottom 90%, right? So most of the assets for the wealthy are business equity. Now, notice they say business equity. In many cases, that's venture capital or early stage investments. And that's some of the work that we do in WealthyU and just exposing first generation high earners to ways to invest that you, in this case, you have to be an accredited investor, right? But this is how the wealthy get wealthier. And that's because they're exposed to, so for example, have you guys ever heard of the PayPal mafia? Like Peter Thiel and who's the owner of Reid Hoffman from LinkedIn, most of their initial capital came from being in as an early stage investor in PayPal. So that's an advantage they have. The 55% financial securities to include stocks and mutual funds, right? 55 to 50%, where the bottom 9%, only 6% hold these assets. And so that's why the wealth gap is so huge. Another thing we see is that what the wealthy know is to put their assets in trust. And it's not, you don't have to be a multimillionaire to have a trust. But what I know is for so many of you is that so many of us, okay, me being a first generation high earner as well, is that so much of our assets are lost because we don't have them properly titled, right? We don't have them in the register. I was talking with another client today. She can't get her parents to do a will, let alone a trust. And so what happens is our assets go into probate. They stay in probate. They get charged with a lot of legal fees. And by the time that money is transferred to the proper person, to the family, those assets have dwindled. So another non-home real estate, meaning investing in real estate outside of just our principal home. I'm not going to go through this in detail, but I would like for you to just see what is the difference between the top 1% and the bottom 9% in terms of the assets and liabilities that they own. Anybody want to guess? In the chat. Right? What is it? They're investing in assets, right? That grow. And that is the point, is that you have to turn your income into wealth. And so you have to begin to invest in stocks and mutual funds, early stage investments, real estate limited partnerships. The difference between earner and owner, really all it is taking your income and investing them in assets that are going to grow and that are tax advantaged. Because that's the other thing the wealthy know. They know how to turn their expenses into deduction. And so one of the other points to this is that, for if you're a W-2 earner, really the only opportunity you have to deduct many of your expenses is just mortgage interest, and they've limited that now. Property taxes, they limited that as well. Charitable donations, they limited that as well. And so the other uh, if you noticed in that chart, business equity, is that many wealthy people are business owners or are partners in a business, which allows them to deduct a lot of those expenses that we're unable to. But you don't have to be a business owner. You can also become an investor and have tax preferential treatment through capital gains, dividends, depreciation, and amortization. And you can do that by being an investor, either in individual stocks, real estate limited partnerships. There are ways that even as an earner, you can apply the same tax advantage strategies of the wealthy. And so for high earners, what are some of the things that you can take advantage of? Well, I know one of the benefits you may have through your employer is an HSA account. And that HSA account allows you to put $3,600 as an individual or $7,300 as a family. And it becomes that money can grow, you can invest it. The next thing is a Roth style 401k or a traditional 401k. In some cases, you have an ability to do both and deferred compensation. What many folks don't know is you can make a contribution. There's no limit on the amount of income that you can earn and still open up a regular IRA. You may not be able to deduct it, right? But you can do what I talked about earlier is a backdoor Roth. The next thing is after, and I think this is a great hierarchy, after you've exhausted all these things, then you can get into non-qualified deferred annuities. You can also build an investment portfolio outside of your 401k or deferred compensation plan that allows you to take advantage of capitals, the lower rate on dividends as well. And so the key, and what I want to leave you with, is that it's never too late. Like Belinda was not, young. Like the younger you start, great if you're like Tennille, but it's never too late. I mean, even at 50, if you start making the maximum contribution, you can get to $1 million, right? Even at 50 in 20 years, you can achieve almost 7 figures simply by accelerating your financial growth. And so in this case, the hypothetical is based on an 8% average annual return. But what I want you to understand is that the historical return, and I won't get too technical, but now the historical return on stocks is, especially for the S&P 500, is, I want to say now hitting about 12%. Imagine your money is growing much more rapidly than that. And so the reason I love doing these presentations is because for many of you are sitting 10 feet away from gold, and you have these different plans, but your money's not working for you, right? And so for staying till the end. What I believe is first generations investors need a transformational wealth blueprint that it addresses our unique situation. And our unique situation really is that we were never given the knowledge of how to build wealth, right? And what we need to begin to understand is the role that not only growing our money and earning more money, but how to keep more of what we earn. And so I started out, the question I had earlier was, what is your biggest expense? And so I'm going to stop sharing for just a minute. And I want to go back to the chat and see. Okay, so you guys said mortgage, housing, rent, housing, mortgage, rent. I'm going to challenge all of you. You know what your biggest expense is? It's taxes, right? If you look at your federal, if you look at your state, and how many of you are like, I want to make sure I put enough in there so I don't have to pay Uncle Sam, right? Okay. The point I want to make is the reason the wealthier get wealthier is because they know how to use tax advantage strategies to their benefit. And what I want you to know is you don't have to be mega wealthy to do that for yourself, right? You just simply need to understand. And here's all I want to tell you. I know you hear these internet gurus telling you about, they've got the perfect formula and it'll work for everybody. It won't. Here's what I want you to know is that all of you have unique opportunity levers, right? And what are those unique opportunity levers? Those unique opportunity levers may be that through your employee benefits, there are different things that you can leverage so that you pay less, right, in taxes, and you keep more of what you earn. Some of you, if you're anybody in here, like, in these days, everybody's kind of concerned that they may not, you never know with these employers. There's quiet quitting and there's quiet layoffs, right? So most people have some kind of side hustle. Well, what do you need to do to fully operationalize that so that you can use it to a tax advantage? You got to have the right business entity. You got to have the right, bookkeeping. You have to have the right things, and then begin to understand, okay, what you can do with that portion of your income and how you can begin to take some of those, move some of those expenses into deductions, right? Whether it be vacations, whether it be when you go somewhere and you're looking at a real estate property, whether you're investing through a real estate limited partnership that allows you to get deductions passed through you. The point that I want to make is because we've never been exposed to these strategies, we think they're limited to just the people that make millions of dollars. No. Here's what I want you to know is that you have to learn how to leverage what you already have. And when you learn how to do that, it opens up other opportunities for you. This is what I want you to know. Okay, so I just wanted to go back. That's my little trick question. And so if you can begin to reduce the amount of taxes that you pay, Uncle Sam, I'm going to tell you guys a funny story. Uh, we got our taxes back in 2022, and I was just like, I am not feeling this at all, right? Like we had did all the things to make sure that, we would either, I'm not amenable to paying. I'm going to tell you, I don't like getting refunds, okay? Because that means I gave Uncle Sam a loan, okay? but I don't like getting the big tax bill either. And so I had this huge tax bill and I'm like stunned, right? Because I'm talking with my accountant, you should be talking with your accountant quarterly, and I knew. And so I was like, this is not right. Okay. And I'm going to be honest with you, using the same strategies that I know the wealthy used and I know that we had applied, I ended up getting every last dime back. Now, it took them 18 months, but the point that I want to make is even when you have a professional, okay, here's what you guys need to know is that you have to have enough knowledge yourself to be able to evaluate that professional's performance. So what do you guys think I did when I got that big tax bill? I changed my CPA because that's the other thing is if I know more than you, that's a problem. Okay. Especially if I'm paying you. So, good lesson. My husband was, well, no, Deb, we've been with this account, whatever, and it must be right. I'm like, I did too much this year, made the right contributions in the personal 401k, took the deductions over here, yada, yada, yada. And so, you know, had the real estate deductions, all of that. This is not making sense to me. And so that's what I want you guys to know is this is financial ignorance is expensive. And the other point I want to make is that it never gets better if you don't address something, right? It only gets worse. And so here's what I want you to know. The only thing standing between you and the financial success that you desire, and I don't mean just financial success, it occurred to me that as I see the growth of women in WealthyU, what ends up happening is they have greater peace of mind, right? So I just want you to know that's what wealth is about. I have friends that say, oh, all you talk about is money all the time. It's like, no, I'm not talking about money. Money is simply a tool. You guys get this? Like it's simply a tool, but if we don't know how to manage that tool, then we don't know how to leverage it to our full benefits. True story. We had a member, and one of the first things we do is a wealth audit, right? Where we help you take a look at what you have. And I know the members here, like Makata, okay, I had seen Natalie was here, but we do a wealth audit, and that wealth audit is designed to just show you where your opportunities are, right? Like, what is your gap? Okay. And one of the things that she learned, and I don't think she learned this until after she got into WealthyU, was that she had been with her employer for over 25 years and had been contributing to that plan religiously, right? Like she was a saver. And when we looked at her rate of return, it's not that that plan hadn't grown, it had. But I was just doing the numbers 25 years and you've been contributing and you've been getting an employer match. She had a negative 3% return over 25 years. So what does that mean? Well, what that means is that 300, she could have already had 7 figures. Do you understand what I'm saying? If her money had been growing at just, I don't know, 6%, right? Like something very moderate and conservative. But here's what I see, ladies. You're looking at these accounts and you're like, oh, it's not going down. Okay. Well, of course it's not going down by virtue of the fact that you're contributing to it every month. So your own contributions, right, are also impacting your overall value of your portfolio, but your money's got to grow. You with me? Like the difference between you earning, I'm gonna give her 2%. I'm not gonna give her a negative percent, right? Like the average investor earns about 2%. Okay. Is the difference between you having 400,000 versus at 10%, right? You having $1 million. So what I want you to know is do not focus on, do not focus on whether your money's going up and down. Okay. You got to focus on the rate of return and if your money is growing. Is this making sense to you? Okay. And so, one of the things that I love to do as well is to offer a wealth audit. So for all of you staying with me this afternoon, hold on. I want, if you scan the QR code, I'll do a wealth audit with you, right? There's no charge for it, right? And just help you kind of understand what is your personal rate of return and what are your opportunity levers, right? So in the chat, I don't think I can. Let me stop sharing because I can't put this in the chat. Hold on, I'm going to put a link as well if you would like to take advantage of a wealth audit. And then the other thing I want to, before I go to Q&A, I want to make you guys aware of is that all of you will receive a copy of my most recent book, Wealth Secrets, where, I mean, you're just going to, you know what, I'm so proud of that book. My most recent book is that I really was able to chronicle real life stories, right, of transformations. Like in my book, A Purse of Your Own, I started out with the story of a woman, but they were archetypes. You know what I mean? Like they weren't real people, real people. I mean, you're going to see some stories. And I mean, it didn't take long either. That's what I want you guys to know. I'm sorry Natalie left, but Natalie, who was on, she's running a business. I heard her, I saw her gestures. She was talking, but Natalie increased her portfolio by 40% literally in 8 months. Now, disclaimer, okay? The market certainly was a part of that, right? Like, I don't know what the market's going to do from day to day. I'm not getting on, when the market goes down, I'm like, oh my God, what do you need to do to be? No, you need, in WealthyU, our credo is that we never lose. We either win or we learn. And that is really the shift from earner to owner, having a wealth mindset and understanding that it's not how much you save. It's the return on investment and it's how much you keep that's important. And with that, I'm going to open it up for questions. If you want to open your mic, if you want to use the reaction and raise your hand, either of those will do. Questions, 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 ladies. Don't be shy. Okay, or if you have a question, you can also put it in the chat. The link to schedule a wealth audit. Uh-oh. None of those times are available. Were you going to tell me that, Jacelyn? Oh, you did. All right. I thought it wasn't working. It must be. Okay, fantastic. Listen, ladies, here, all I want you to know is that it's not enough to stay on the grind, right? Where you're out here, you're running, you're trying to figure out, if I can just earn more money. That's not the secret. Okay. You got to take those earnings and turn them into wealth, and you've got to do it in a strategic way. Um, I'll talk a little bit about our programs as well. So in WealthyU, we meet you where you are. Like if you're running to get to your first six figures, we have a program. If you're running to get to your first seven figures, we have a program. If you're running for seven figures and beyond, we have a program. And the reason why our programs are set up that way, because new level, new devil, right? Like you made the six figures. So what's the devil? Okay, how do I keep more of it? I feel like I'm making this money, but I'm not keeping any of it, right? Like, how comes it seems like I'm making more money, but at the end of the day, I'm not bringing more home? That needs to be addressed, and there are ways to address it, right? So you got to have a strategy for that. You get to over seven figures, new level, new devil, right? So now it's tax advantage strategies. What are the things that you can do? So in WealthyU, we have different programs. We've got women who've made their first investment properties, learning how to analyze and research real estate. We've got women who went into their first venture capital deals. I mean, I typically bring folks in that I vetted, and they get to present, and then the members learn from that, and then we evaluate it, and if it fits their profile, and they have enough liquidity that they can, because with those deals, you got to be willing to do 5 to 10 years. There ain't no magic magic number for that. And the other things, the other ways you can invest, not just through your 401k, but you can take advantage of the tax code, is through investing in real estate. I know a lot of you don't want to be landlords, but you can invest in real estate through real estate limited partnerships, multifamily home. There are a plethora of things out here. In fact, I had someone get on my calendar and pitch me on an alternative investment. Now, I'm not big on alternative investments. And the reasons that I'm not is because they're illiquid, and many times you cannot, keep track of them. But long story short, the point I want to make to all of you is this is not rocket science, right? Jaycelyn, if you could come on. Jaycelyn is a WealthyU ambassador. She's a member success advisor. And when she started in WealthyU, she knew nothing. Jaycelyn, if you could open up your mic and just share a little bit about yourself.
Hello, everyone. Before I joined WealthyU, I was really feeling like I didn't have very much hope when it came to my 401k or just retiring comfortably at all. And sat down with Deborah, let her know I was thinking about just putting myself in a situation where I wouldn't have to pay my mortgage. And she was like, would you just really take a look at this so you can see exactly where you are and where you can go? And when we sat down and we did take a look at my portfolio, I was amazed that I was just about to practically hand my home on a silver platter without understanding about money and how to work with it and investing and how to do that. Just amazing. I'm really grateful.
Oh, well, long story short, she is
Mhm.
on her way. She was about to sell the asset, right?
Mhm.
That was appreciating in value. She lives in a very what do I want to say, expensive state. and where home values are, $1 million or more. And again, it's just understanding how to leverage that asset, but it's not giving the asset up. Do you
Mhm.
understand what I'm saying? And why I'm so grateful for Jacelyn is because a lot of times I get it after the fact, right? Well, Miss
Yeah.
Deb, I just got into this. It's like, oh, and then I got to unravel, right? And sometimes it's too late to unravel. But the point I'm making, that I want to make, is financial ignorance is expensive.
Mhm.
Many of you could have so much more. Renita, as you know, you do a lot of education around the stock market, what's happening, what's going on. And for many of us, this is just not something that we were exposed to. The other thing I'm proud of in WealthyU is basically we teach the fundamentals. So we teach you how to analyze and research a stock, how to analyze and research a mutual fund, how Morningstar actually came up with those stars. And sometimes just because you got 5 stars doesn't mean it's a good fund. And so we really get underneath that and help you to listen. Numbers don't lie. When you get the power and a framework and learn how to evaluate that, any kind of opportunity that comes to you, right? Typically it's just a numbers thing, and a framework, right? Which we have. And once you get that framework, no one can take that away from you. And so what I'm most proud of is that in WealthyU, we teach you how to acquire the most valuable asset of all. And that's the knowledge of how to build wealth. It's the knowledge, right? And ultimately, my ultimate goal is for women to pass this information on to their families, right? So, and that's what I mean by inherited. That knowledge is inherited. So once you get that knowledge, you're going to be able to, your kids, your nieces, you can share that with them and put them so much further ahead. Jacelyn, thank you so much for sharing your story. Jacelyn is a WealthyU ambassador. She is someone who has internalized the concepts that we use in WealthyU, and now she supports women on their journeys. And so what's really, really cool about our team is that in order to be on the team, you would have had to go through the WealthyU, coaching itself. But what that gives is such a great deal of empathy, right? Like no question is a dumb question. We do skill building sessions, and people say, "Oh, your people have so much patience." I'd be like, "Yeah," because they were like you. They didn't know how to share a Zoom screen. They didn't know how to put that stuff in that. They didn't know how to fill out that Excel spreadsheet. They were stumbling and bumbling. And so now when they see other people, and they'll say it, they'll be like, "Oh, yeah, I remember." Just take your time. Take your time. You'll figure it out. And with that, thank you so much. We're right at 12:59, 1 o'clock. I said I would be respectful of your time. Please take advantage of the WealthyU audit, or if you want to learn more about WealthyU, we have a community on Facebook. It's called Purses and Portfolios. I go in there usually once a month. I'm chopping it up about, what my outlook is, what I think is important. But I want you to join our sisterhood. We're on a mission to help 1 billion women get to 7 figures and beyond, and we want you to be one of them. And with that, thank you so much, guys. Have a great afternoon, and I'll see you next time.